there, day traders. Welcome back to Fides trading channel, and we are back again with another weekly flows video. Today is Monday, the 7th of July 2025, and we will be looking at the week ahead until the 11th of July 2025. If this is your first time joining us for one of these videos, in these weekly flow videos, I break down the markets using a top-down approach, starting with higher time frames to map out the bigger picture. By analyzing key zones, trend structures, and institutional behavior on the weekly and daily charts, I uncover the dominant bias and potential market flows for the days ahead. This helps me filter out the noise and anticipate major moves, and stay aligned with where the smart money may be positioned. Tune in as I decode the charts and lay the groundwork for the trading week ahead with clarity and precision. Starting with the gold markets, we are on the monthly time frame. As we can observe, gold markets are very much in a bullish trend. We can see price comfortably trading above the 50 SMA and very much in the overextended levels of the RSI above 85. If we just get in closer to the price action, we can observe the indecision candles that have been created for May and June, which resulted in a consolidation within the zone. So it is clear that market is slowing down and we could see a retracement sometime soon. These indecision candles, these spinning tops, definitely indicate that gold markets are waning from their bullish momentum and investors are stepping into other forms of the market, whether it be indices or currencies. So dropping into the weekly chart, we can actually observe this consolidation zone a lot better. We can see a lot of blue candles, but we can also see a lot of red candles here with the bears taking controls in certain positions of this market. We can still see that price is comfortably trading above the 50 SMA, and we are more in the bullish region of the RSI above 55, but we can see that momentum is waning, especially at the start of this consolidation moving forward. As it stands, price is also trading above the 21 SMA, so the bullish trend is still very much intact. Dropping into the daily chart, we can observe the consolidation and we can see that price is trading between the 3250 level and the resistance level of 3450. Price is just popping up, hitting those levels and actually dropping, and we are now in a bit of a bearish trend as price makes its way back to the 3250 level. As it stands, price is trading above the 50 SMA, just above the 50 SMA, and we are seeing signs of the bears stepping in, with price trading a little above 55 but also tapping below 45 on that RSI level. So no clear indication of market directionality and momentum as the markets figure out what's the next move for gold. Price on the 4-hour chart, we can see that price is trading below the 50 SMA and very much showing strong bearish signs, trading more below the 45 level than the 50, above the 55 level. Now, as it stands, we can see some bearish price action structure, especially here. We had a bearish trend with intact with lower highs and respective lower lows, and we can observe that price did tap the previous lower high and actually has dropped from there at the opening of the week. We did have a bit of a gap up at the beginning of the week, at the beginning of this Monday, but markets have sharply dropped towards the 3300 support level. So at the moment, we are very much bearish on this market per the 4-hour time frame, but we need to be cautious as we approach the 3250 level right here, because this is where the 200 SMA is sitting, and we have seen bounces from the 200 SMA level, as you can observe here, the 29th of June and the 15th of May, respectively. So this is an important level to look out for here. But until then, I will be trading shorts down towards this position, but trading shorts, of course, with a lot of caution. As it stands, the bearish trend is currently in full swing. I'm looking at 3322 as a potential place where if price comes back, this could be a nice little discount zone to capitalize on, where markets could potentially come up, test, and then push down to 3250. So something just to observe for the week ahead. Price is currently trading at 3301 with futures price at 3312, which is about a 10-point difference. So that adds bullish confluence, but as of recent, despite the higher futures price, the market has been falling, so I'm not paying too much of heed to the futures prices at the moment, but it is an added confluence for the market. Moving on to US tech, we are starting on the monthly time frame, Nas100. As we can see, markets are sharply moving bullish, and we have created some new all-time highs as of last week, breaking above the previous resistance at 22,000. As it stands, the market is trading at 22,767. Excuse me. We are comfortably trading above the 50 SMA. We're far removed from the 50 SMA, and we are approaching the overextended levels of the RSI above 70. On the weekly time frame, we're comfortably We're comfortably trading above the 50 SMA, and we are trading the bullish region of the RSI above 55. We've broken past the previous resistance level of 22,100, as I have spoken about before, and we are creating all-time highs. On the daily time frame, price is still comfortably trading above the 50 SMA, and we are trading very close to the 70 level, above 55 on the RSI, adding to that bullish momentum. As per the price action structure, we can observe higher lows and respective higher highs, with the current higher low at 21,425. Price is comfortably trading above the 21 SMA and the 50 SMA, and we have an intact bullish trend line, support trend line, which has been tapped twice. So we are waiting for that third touch just to confirm the trend. So we can see that Nas100 is very, very bullish at the moment. On the 4-hour time frame, we can see that Nas is trading very bullish as of the bounce from the support, which happened on Monday at 21,000, which happened last week, 2 weeks ago? Yeah, 2 weeks ago, Monday. And we can see from the support of 21,420, the market has been moving very, very steady bullish since. Last week, we did see a bit of consolidation where the markets were deciding what it was doing, but as of Wednesday, we had a firm bullish push to the upside. And as it stands at the opening of the week, the market is very much in a ranging motion above the break and retest level of 22,700. I would expect some type of push from this level, but I do want to actually point out, despite price trading comfortably above the 50 SMA and the 21 SMA, we do have RSI divergence here. What does RSI divergence mean? Well, we are seeing new higher highs being created as of these particular levels. I'm just going to delete this. We do see new higher highs being created at these particular levels, but per the RSI, the levels are requiring less and less momentum, which could mean that there are more short positions that are coming into these orders. If this is the case, and we do see this is a clear indication of a retracement, and if this is the case, we are looking at potential discount zones at 22,700, 22,400, or potentially, if the markets really do decide to come back and retrace, 22,100. So these are the potential zones that I'll be looking for a pivot from. So boom, bang, or potentially markets dropping all the way down there before pushing to the upside if it is a deeper retracement. So yeah, very bullish for Nas100 US Tech, and I will be looking for long positions once the retracement is in play. Taking a look at US30, we are on the monthly chart, and we can see that US30 is definitely bullish. We have a strong trend on the monthly time frame above the 50 SMA, and we're very much trading the bullish region of the RSI. We could be creating new highs very soon if the market breaks above the 45,000 barrier. On the weekly time frame, we can see a strong bounce from the 50 SMA, price comfortably trading to the upside now, and we are in the bullish region of the RSI trading above 55. On the daily time frame, we can observe some bullish price action structure with higher lows and respective higher highs. As it stands, the markets had a strong push from Monday, the 23rd of July, which kickstarted the bullish trend. It was also where we saw the 21 SMA cross the 50 SMA, and it is clear that the bulls are in firm control of this market. We also did tap the sweet spot region, and we had a pivot from this point as the markets are now pushing into the overextended regions on the RSI. So it is clear that the retracement is imminent. It's just a matter of timing. Dropping into the 4-hour time frame, we can see that the markets have been in a bit of a consolidation as of Wednesday, but nonetheless are still pushing bullish. We can see firm bullish price action structure with high lows and respective higher highs. Very minimal retracements, mostly just consolidations before push up. Price is comfortably trading above the 50 SMA and the 21 SMA, but we are observing some RSI divergence where price is creating new highs, but the RSI is showing waning peaks. This means that we could be seeing a retracement very soon. There's very little momentum going into creating these new highs, and thus it could be momentum is drying up, and we will see a retracement towards a discount zone before the market shoots up again. Where can I be potentially looking for these retracement zones? Well, I'm observing 44,400 as a potential zone, 44,180 as another bounce zone, and if the market retraces deep, potentially 43,160 for bounce to the upside. So yeah, this level here, or potentially 44,420. So that is very much US30. Taking a look at the VIX index, the VIX is currently at 17.61 from the close of last week at 16.33. This is still showing a risk on sentiment, indicating investors are still looking to invest in indices and step out of gold. However, I also think there's a lot of caution coming into the market as investors figure out what's happening with Trump and the tariff implications as we approach the 90-day benchmark. Currencies for the week. Euro is seeing strength against the yen and the USD. Just taking a look at the indices. Yeah, definitely seeing some strength there. There's weakness in the USD at the moment with the continuation of the bearish trend during the past week. We did see some consolidationary factors, but it does look that there is a potential pivot where USD could be poised to make an uptick during this next week in the potential retracement. However, we do have to observe how the markets react to the tariff implementations. Yen last week did see a bit of a uptick, however, closed the week very, very bearish. So it is important to observe how the yen reacts at the open. Fundamentals for the week ahead, let's take a look. Not much going on Monday, with nothing actually. As for the rest of the week, we have FOMC minute meetings and unemployment claims on Wednesday and Thursday respectively, and just a bit of CAD news. Taking a look at some of the major headlines coming out of FX Street, we can see that gold price slides closer to 330 amidst emergence of some USD buying. Gold price attracts some sellers amidst tariff uncertainty. Fundamental overview: gold recovery remains shallow and market don't expect Fed rates cut in July. We are seeing some bearish movements here, or potentially sideways bias. Okay, so we can see that there is a bit of a bearish tonality coming out of the gold market, so it is important to factor that in and also take a look at some headlines on TradingView. Taking a look at the stock headlines, we can see Q3 2025 equities forecast, final push before Fed pivot, question mark. Nothing else there. Yeah, S&P 500 notches all-time highs. That was 27th of June. Elliott wave, yeah. So in terms of indices, not much coming out of the headlines here, but it is important to stay ahead. So I would take a look at some of the trading view headlines. Let me see if I can tap into that quickly. Okay, didn't really find the news outlets, but I did want to quickly cover the currencies again. So Euro USD showing a lot of consolidation, currently trading just below the 21 SMA, but above the 50 SMA. We are in the bearish region of the RSI at the moment, so something to look out for on the 4-hour charts. I am still very bullish on this pair, and this could just potentially be a retracement before a push to the upside. I am looking at the 1.16 level as a potential bounce zone, or 1.163 as a potential bounce zone. Taking a look at Euro JPY when this market actually loads. There we go. Bullish trend continues. We did see a strong consolidation last week with the resistance at 169.74. The market firmly broke out of that on Thursday and is now continuing the bullish trend to the upside with very moderate bullish momentum. As it stands, price is trading above the 21 SMA and actually using that as a platform for a bounce, trading comfortably above the 50 SMA as well. And our major support zones is at 168.63, and we have a potential break and retest level at 169.74, where I would be potentially looking for a bounce and trading that wave to the upside. USD JPY has been making strong bullish waves. Clearly, the dollar gaining a bit of an upper hand over the yen weakness. And it does seem that we are seeing a bit of a bullish retracement in this particular market. However, market directionality is yet to be confirmed, and I will be staying firmly out of this market. Well, that is the analysis for today, traders. I hope that you enjoyed it and you got some insights for your week ahead. Please remember, this is not financial advice, but my personal opinion in the current state of the markets. Before taking any positions in the markets, please make sure to do your own research first. If you enjoyed it, please like and subscribe, and I'll catch you in the next Fides Flows video. Happy hunting, traders, and I'll see you soon. Cheers.